Welcome to my channel today as we discuss Forex technical analysis indicators. How important are these indicators? Do you need them as a trader to succeed? Must you have these indicators in your toolbox to trade? As we progress, the lessons will tell if you really need it or not. But I will shock you. Some or most successful traders pay little or no attention to the indicators for some reasons. However, you can never discard them in your trading. So let's look at details of these technical analysis indicators as they will help you to trade as a forex trader or a successful forex trader. Before we delve into these indicators, let us establish the foundation. What is technical analysis? How do you apply them in your trade? As you can see, it is the forecasting of the market future based on past price history, chart patterns, market reactions. That is technical analysis. That is reading the market movement or intentions through the charts. That is what we call technical analysis. We have the fundamental analysis, which focus on economic data, such as unemployment rate, non-farm payroll, CPI, and a lot of factors. I always urge new traders to pay good attention to technical analysis because the fundamentals of most currency pairs don't change easily. So since they don't change easily, the technical analysis is what tells you what the market goes in the nearest future. So technical analysis is all about understanding the language the charts speak. It's as simple as that. Types of forex indicators. There are various types of indicators. We have thousands of forex indicators. However, they are grouped based on their purposes. So there are four major groups of market indicators or forex indicators that we will discuss in this video. The first one is the trend indicators. These indicators help to identify the overall trend. Is the trend upward? Is the trend downward? These indicators will tell you the overall trend. However, before we proceed, I will please suggest you subscribe to my channel. As you can see, it's a fresh channel. I have a lot to share, but that is only when we come as one. So subscribe, click on the notification button, comment, like, so that this video will be transmitted to others that are looking for this information as you've gotten it. So what are some of those indicators? We have the MACD, moving average, convergence, divergence. We have the average directional index. These are, and we have a lot of them, but these are the most popular. Their work is to determine the trend, or when you place it on your charts, it will quickly tell you that this pair is a downward movement or an upward movement. We have the momentum indicators. Now, are you feeling, oh, this market has been selling for a long time? How sure am I that the buyers will not come to the market? Or the buyers have been buying for a long time. How sure am I that they will not come down? Now, this indicator help you, or indicators, the momentum indicators, help you determine the momentum in the market. The basic ones are RSI, Relative Strength Index, or stochastic oscillator. These are the prime example of momentum indicators. Once you see them on the chart, they will tell you if it is most scaled from 0 to 100. They will tell you if really they are, the market is overbought or oversold. I would like you to have a practical idea on how to use these indicators and what they look like. If you want to have a better understanding, please go to this website, Baby Pips. Baby Pips. Here you will find how to use any indicator I will talk about. You will find it here. Just come to this place. If you want to talk about MACD, search for MACD here, and it will bring everything in this site about MACD. You can see it. MACD, how to use MACD, and once you click on it, it will give you what you want. That is exactly, this is the site that simplifies technical indicators to the level that even if you are starting Forex today, you will definitely understand what these indicators are. Now, from the momentum indicators, we move to volatility indicators. These are the indicators that dictate the spike. The market could be volatile or sometimes quiet. So what are the indicators that may give you sign that the market may be volatile? We have the average true range. This helps you gauge how much price might fluctuate, allowing you to do what? Set your stop loss levels. However, I am never a fan of stop loss. I don't encourage the trade of stop loss. So in one of my videos, you will say at the end of this video, by the end of this video, you will learn how to trade without stop loss. So these are the example of, or this is an example of volatility indicator. The next is volume indicator. This refers to the amount of currency pair, the liquidity in the market over a particular time frame. Volume indicators like volume bars can help you confirm price movement and identify potential breakout from trading range. These are the 4 major categories of Forex technical indicators every trader must know. So if you come to a chart, you want to dictate what is the trend in this chart, and common sense cannot give you, or you cannot identify by just a site, you can deploy the trend indicators. Or you want to know if the market has been overbought or oversold, you deploy the momentum. At what level, how will this market fluctuate for the day? You employ the indicator responsible for that, which is a volatility indicator. Then you can, if you want to know the volume, the liquidity in the market per particular time frame, then you use this volume indicator. Remember, indicators are tools. They are not fail-proof. They are not formulas. You should be used in conjunction with your understanding of the market and other factors, a lot of factors that you use in conjunction with these indicators. How do you use indicators? How do you use them? Now, you don't rely on one single indicator. You combine multiple indicators from different categories, as you can see, for more comprehensive market analysis. I will still shock you by the end of this video. Please subscribe to my channel, share, be part of my community. Let us grow this channel. Then understand the limitations. Yes, this is very, very vital. Very, very vital. And this is why most successful forex traders don't use indicators. It lags. Indicators lag. That means they only act after the price action has been taking place. So as a trader, what do? And you need to have on the spot output from the market. That is why you must study your technical indication analysis. Sorry, your price analysis, your price actions. The indicators come before the price actions. So please, I urge you, in as much as you want to know much about these technical indicators, tell yourself, I must combine them with price actions. Once you understand the price actions in the forex market, you are made. However, you might have been trading with indicators, or you love indicators. You can make your way out of it. Any indicator you want to use, or any indicators that your strategy is tied to, you should backtest it. You should backtest it to understand the performance, the winning rates of that indicator and the strategy you deploy in the particular trade. Beyond the indicators, what do? You must be very, very abreast with the news. Yes, the fundamentals. But the fundamentals don't change over time. I said it takes 5, 10, 20 years for fundamentals to change in some cases. So, however, we have basic news, monthly news, weekly news that you are expected to be aware while trading those indicators. The next thing is develop a strategy that is planned. You can't make it without a proper plan. Entry point, exit point, profit taking, stop loss, which I don't use. I call it stop quarter loss. All these things, you must structure it and be disciplined to follow your. In fact, your success depends on your discipline. No matter how good the strategy is, no matter how planned. Let's look at it this way. Take your football team, the football team you're in love with. No matter how they plan that, no matter how they train, on the D-Day, if they fail to stick to their playing plan, they will definitely fail. So applicable to forex trade. So never risk more than you can afford to lose. Yes, that is a general risk rule. Never risk more than. So risk management is simply in forex whatever possible and legitimate means you can do to protect your capital while trading. That is risk management. It's a skill you must develop. Conclusion: the technical analysis indicators are valuable tools for forex traders. Yes, they are. By understanding different indicators types, using them strategically, and combining them with other analysis methods, you must combine them with other analysis methods. You can get valuable insight into the market and make informed trading decisions. Remember, practice patience and healthy dose of skepticism are essential for navigating the ever-changing forex landscape. But let me shock you. I stopped using any form of, let me show you my platform. You can see my platform. Free of any indicator. This is normally how I trade. Why? I am a master of the price action. I took time, years to master the price action. So I don't need, once I look at a chart, I know what the traders, other traders in other parts of the world could possibly do. So I don't need indicator. That does not mean I'm discouraging you from using it. But I strongly urge you to master your chart analysis. price pattern, candlestick formation, and you will forever make money as a trader. Please subscribe to my channel, share as we progress in this channel where I explain a lot of truth about forex trading. Once more, share, subscribe, and click the notification button so that we flow as time goes on.